Hey, Jennifer Polizzi here from Orion Lending, going over today our COIN X DSCR program and the ability to use short-term rental income to figure out your DSCR. So this is our COIN X matrix, and you're going to go to the lease requirements, short-term rental variable income. So this is where we're talking about income that's generated from short-term rentals like Airbnb, VRBO, FlipKey. There's a bunch of different ones that your borrower may be utilizing to generate this income. So there's a couple of things you have to keep in mind. If you are doing a 1% DSCR, so above the PITI, so the rents cover the PITI, you're going to take a 5% LTV reduction when using short-term rental income to figure out the DSCR. When you're below 1%, you do not have to take the hit. So you're going to be going off the under 1% eligibility matrix and figuring that out. So remember, we want to make sure we're looking on the right matrices here when doing these particular programs. The DSCR calculation, so our debt service coverage ratio, again, then is very important. We are going to be doing a 12-month average when talking about short-term rentals. Because there is seasonality when you're talking about short-term rentals, any calculation is going to be done on a 12-month average. You're going to take a reduction of 20%, so 0.80 of the gross rents when doing short-term rental income, because there are additional costs on short-term rentals that come into play. So you are going to take a 0.80 off that 12-month average to figure out the DSCR. So there's 4 ways that you're going to be able to do short-term rental income. So you can use a 1007 or 1025. Now, that is going to be, if you can find the appraisers to do it, that's going to be the easiest way to do it because it'll be right there at the appraisal. I have talked to a few AMCs, so if you are interested in getting that information, they will try to find the appraiser to do that for you right on the appraisal and give you short-term rental 12-month average on your actual 1007 or 1025, and we can use that. So you can use short-term or long-term off of that, but of course, short-term usually is more advantageous. If you need that information, I can help you with that. If you're doing a refi, you can use the borrower's most 12-month recent history. So you can get their bank statements, you can get their information from Airbnb or VRBO, and really try to use that 12-month average. Take off the vendor management fees and use that rental income to figure out your DSCR. So that is a good one too. If your borrower already owns the property, that's not really on a purchase. Again, looking at their rental deposits, you could do that. That's another great way of doing it on a refi when the borrower already owns it. We can take the average of their 12 months. But another great way to do it, if you're doing a purchase, and this is very popular, is an AirDNA rentalizer report. So when you're doing a purchase, you're going to be doing 2 things. You're going to either have the appraiser do it, or you're going to get this AirDNA rentalizer report. Now, it is a report that has to be paid for with a service through AirDNA. If you have experienced short-term rental people, they will definitely know what this is. It is probably the most popular one that they're looking at to see how much money they will generate from a property if they're going to get into a short-term rental. This is only for purchase transactions. You've got to have certain information. So it's got to be a 12-month forecast. Your occupancy rate has to be above 65%. So all of this, 6 comparison properties. So all this information will be on the actual AirDNA report. And this is the information that we will need for it to be a valid report and to be able to use that information. You're going to have to get the market grade by zip code, and you're going to have to get a B rating or better. And then you take that annual revenue and you divide it by 12. So that is going to be the AirDNA way of being able to use that short-term rental income to figure out the DSCR on a purchase for your borrower. So the 2 most popular ones I can tell you will definitely be the being able to get it on an appraisal, which I think would be the most advantageous way because you're paying for the appraisal anyway. So let's go to the AMC. You can get a quote on that. See if they can find an appraiser. You can order it that way through our Mercury portal. Ask them to do it that way and put it out there so we know your borrower can get that right information on short-term rental income, or get the AirDNA rentalizer information here to be able to get that report and use that to figure out the DSCR on an actual purchase. And then a reminder that if you're trying to go 1% or above on a short-term rental, there is going to be that 5% LTV hit. If you are using already the under one matrix on the DSCR COIN X matrix, then you don't have to hit for the 5% LTV. And then you also, of course, have to meet all the other guidelines for the DSCR program. So that is the great way and the really great guidelines around being able to use short-term rental income on a DSCR purchase under our COIN X program. If you have any other questions about this program, please reach out. Check out the guidelines and make sure you're covering everything you need when you're using this program. Of course, reach out to me if you have any questions about it. I'd be happy to help you. Thank you so much for watching this. Reach out to me if you have any questions, and let's make some more DSCR loans. Have a great day.